Are you tired of watching your hard-earned dividends vanish into the abyss of taxes? Imagine if you could enjoy those juicy, high-yield dividends without Uncle Sam taking a big bite out of them. Sounds too good to be true, right? Well, stick around because today, we're diving into the world of high-yield dividend investments that are not just profitable, but also tax-efficient. Whether you're looking to supplement your income before retirement or just want to keep more of your earnings in your pocket, we've got some exciting options lined up for you. We'll break down the types of dividends, introduce you to some top-performing stocks and funds, and even explore those hidden gems that offer tax-free income. So, if you're ready to learn how to maximize your dividends and minimize your taxes, you're in the right place. Let's get started. If you want more tips on building wealth, hit the subscribe button. Your support helps us create more valuable content for you. First, let's understand the two main types of dividends, qualified and non-qualified. Knowing the difference is crucial because it directly affects how much you'll pay in taxes. Qualified dividends are those paid by U.S. corporations or qualified foreign corporations and meet certain holding period requirements. These dividends are taxed at the long-term capital gains rate, which is significantly lower than your regular income tax rate. On the other hand, non-qualified dividends, often referred to as ordinary income, are taxed at your regular income tax rate. This could mean a huge difference in your take-home pay. Now, let's look at some specific examples of investments that offer qualified dividends. One stock that stands out is Oneok Inc., ticker symbol OKE. Oneok Inc. is a company involved in the gathering, processing, storage, and transportation of natural gas. They operate primarily in the Mid-Continent and Rocky Mountain regions of the United States. The best part? Their stock currently offers a qualified dividend yield of around 5%. This means you get a substantial dividend payout while benefiting from a lower tax rate. But stocks aren't the only way to secure tax-efficient dividends. There are also closed-end funds that offer dividends classified as long-term capital gains. Let's talk about one such fund, the Eaton Vance Tax-Advantaged Dividend Income Fund. This fund focuses on providing tax-advantaged income by investing in dividend-paying common and preferred stocks, with an emphasis on those with qualified dividend income and long-term capital gains. This strategy not only offers higher yields, but also reduces the overall tax impact on your dividends. Now, for those who prefer a more secure and tax-free option, municipal bonds can be an excellent choice. Municipal bonds are issued by local governments and offer tax-free interest payments. A great way to invest in these is through the Vanguard Tax-Exempt Bond ETF. This ETF provides broad exposure to investment-grade municipal bonds. The interest earned from these bonds is generally exempt from federal income taxes and, in some cases, from state and local taxes as well. This makes municipal bonds a superb choice for investors seeking stable, tax-free income. Each of these investment options has its own unique benefits and risks. It's crucial to do your research and consider your financial goals and tax situation. For instance, while municipal bonds offer tax-free income, they might have lower yields compared to stocks or funds. Conversely, high-yield stocks might offer higher returns, but come with market risks and varying degrees of tax implications. We've discussed the importance of understanding qualified versus non-qualified dividends, highlighted individual stocks like Oneok Inc. for their qualified dividends, explored closed-end funds such as the Eaton Vance Tax-Advantaged Dividend Income Fund, and introduced municipal bonds through the Vanguard Tax-Exempt Bond ETF for tax-free income. Remember, investing is not a one-size-fits-all approach. It's about finding the right balance that fits your individual needs and financial situation. Always consider consulting with a financial advisor or tax professional to ensure you're making the best decisions for your specific circumstances. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more financial tips and investment strategies. Your support helps us create more content that can help you achieve your financial goals. And don't hesitate to leave a comment below with any questions or topics you'd like us to cover in future videos.